morning. The markets are poised for an excellent start for coming week. They would react to the monthly auto numbers, weak Q2 GDP numbers and RBI's measures to arrest the slowing growth. The monthly auto sales numbers for November 2019 have been better than expectations. Maruti, Hyundai, Renault have managed to buck the steep declining trend in domestic sales, while other car makers like Tata Motors, Honda Cars, Toyota Kirloskar, and Nissan continued with their downward trend. The new entrants, namely Kia Motors and MG Motors, continued with their aggressive sales in the month of November 2019. Maruti, which has almost 50% market share in passenger vehicles in domestic market, reported low single-digit fall in volumes sold on annual comparison, but high single-digit month-on-month volume growth supported by new launches and aggressive discounts, indicating that the tide is turning. RBI Monetary Policy Committee meet is scheduled for the first week of December, that is between 3rd and 5th of December, and is likely to reduce the policy rates by around 25 bips in wake of the recently released weak GDP print for Q2 FY20. Q2 FY20 GDP was reported at 4.5% growth on annual comparison, hit mainly by contraction in manufacturing output. Given the sticky food inflation, RBI's commentary on the same would be keenly watched out for. US-China trade talks for Phase 1 deal are said to be in final lap of negotiations. China is insisting on rollback of existing tariffs either completely or partially, while US officials are said to be opposing the same. We will be keeping a close eye on the developments as far as US-China trade talks are concerned. We have selected Dixon Technologies for pick of the week for this week. Dixon Technologies maintained strong quarterly growth. Dixon's consolidated revenue grew by 90% in Q2 FY20 to Rs 1402 crores versus Rs 739 crore in Q2 FY19, driven by strong revenue growth across key segments. The consolidated PAT grew by 2.6 times YOY to Rs 43 crore versus Rs 16.4 crore, aided by lower tax rate, which was 33% in last quarter in the same quarter last year versus 11% in the Q2 FY20. Continued focus on client addition and increasing product offering will help Dixon Technologies to increase its revenue base. Dixon continues to focus on its new client acquisition and product addition to increase its top line. In consumer electronics segment, the company is in talks with large global brand. In lighting product, the company will start supplying to global requirements of an anchor customer and has increased the capacity of downlighters and battens. In home appliances segment, the company plans to introduce 30 models of top-loaded fully automatic washing machine from 6 to 10 kg capacity. The company has tied up with 2 large brands which are likely to utilize approximately 70% of its plant capacity. Backward integration, increasing ODM revenue and improving capacity utilization has aided overall improvements in EBITDA margin for the company. Capacity expansion across key segments based on strong order book along with higher utilization and new customer addition is expected to drive revenue and profit growth going forward. Dixon Technologies has efficient working capital management. Cash conversion continues to be strong, aided by efficient working capital management. Dixon's working capital days stood at 0 in Q2 FY20 from 7 days in Q1 FY20, led by inventory and creditor days. The management has guided for maintaining working capital between 3 to 4 days for FY20. We hence recommend Dixon Technologies with a target price of 3807, giving around 14 to 15% upside from the current market price. Thank you.